Welcome to Money RX for CRNAs and nurse practitioners. I'm Brett Fellows, certified financial planner. Let me start today with something that might feel a little uncomfortable. If your retirement spending estimate is off by just $500 a month, your probability of success can drop from about 80% to under 70%. Miss it by $2,000 a month, and now you're looking at closer to a 30% success rate. So that means most projections show your money running out. Not because you didn't save enough, but because you guessed wrong. And here's the part that no one tells you. Most people are using a method that almost guarantees they will guess wrong. So today, I want to show you a different way to think about retirement. Not starting with spreadsheets, not starting with budget categories, but starting with something far more reliable, your paycheck. Before we get there, just a quick note. We are currently accepting new clients at Oak Capital Advisors. So if you're a CRNA or a nurse practitioner approaching retirement, and you want a financial plan built specifically around your situation, we would love to talk. You can schedule a complimentary discovery meeting directly on our website at oakcapitaladvisor.com or in the show notes below. Okay, now let's get into it. So most people approach retirement planning like this. They sit down, they open up an Excel spreadsheet, and then they start listing out their budget categories. Things like groceries, utilities, car insurance, travel, whatever it may be. They estimate each one, and then they add them all up, and they call that their retirement number. And this is called the line item approach. And it is the wrong tool for the job, because here's the problem. You're not actually calculating your spending. You're imagining it. And when people imagine their future spending, they almost always picture a more disciplined version of themselves. Well, if necessary, they'll do less travel, fewer splurges, will have more restraint. But that version of you, she doesn't exist. Especially not after working 20 plus years in a high-stress career. Real retiree spending runs 20 to 30% higher than estimates. So on a $75,000 target, that's $15,000 to $20,000 per year the plan never accounted for. And that gap between what you think you will spend and what you actually spend is where retirement plans quietly break. So underneath the line item trap sit three beliefs that almost every pre-retiree carries into planning. And the first belief is that I can estimate what I will spend by thinking through the budget categories. Well, we just covered why that's expensive and doesn't work. Belief two is, okay, I'll need 80% of my current income in retirement. This is also known as the replacement ratio rule. And it is trying to approximate four specific things that you won't be paying for once you stop working: payroll taxes, retirement contributions, debt, and invisible work expenses. Now, for a high-earning nurse household, those four items alone can add up to $60,000 to $80,000 a year. So that 80% rule doesn't work either. The third belief is that the categories I budget today will drive my retirement spending. Yes, things like groceries and utilities matter. They are real, but they are not what determines whether your plan succeeds or breaks. So let's start with what goes away when your career ends. For most CRNAs and NPs, four major expenses drop off. Payroll taxes. Social Security and Medicare taxes come out of every single paycheck. Once you stop working, they are gone. For a $200,000 a year income, that's roughly $15,000 a year that simply stops. Then there's retirement savings. Right now, you might be saving aggressively into your 403B or Roth or HSA. Well, in retirement, you're no longer contributing to those, so the cash flow opens up. Debt payments, so things like mortgage, student loans, car payments, many of these realistically are gone or reduced by retirement. That's another $20,000 to $35,000 a year. And then there's work-related spending, and this one surprises people. Things like commute, your parking, work clothes, maybe meals between cases, licensing. When you actually track these things, this can easily be $1,000 a month. Now, here's the key insight. When you subtract those four categories from your current income, what is left, that's not a guess. That is your actual lifestyle spending today. So that is your baseline. So now let's talk about what replaces those working year expenses. These are the four categories that actually determine whether your plan works. So retirement taxes. Taxes don't disappear in retirement. They change their form. So withdrawals from your 403B, taxable. Social Security, partly taxable. And if income gets too high, your Medicare premiums can increase too, sometimes sharply. And this is where a lot of high earners get caught off guard. Because in retirement, you don't just pay taxes. You control when and how you pay them. And if done right, that control can save you $100,000 to we've seen almost $300,000 over a retirement life. Then there's healthcare. If you retire before age 65, you are covering your own insurance. And then after that, Medicare kicks in. But it's not free. Premiums, supplemental plans, prescriptions, out-of-pocket costs. Over a full retirement, a retired couple will spend on average over $345,000 on healthcare over their retirement. Then we have your early retirement lifestyle. We like to call this your go-go years. This is the part that people underestimate the most. So the first 5, maybe 10 years of retirement, you don't slow down, you finally get to live. So things like travel, family, experiences that you have been putting off for decades. Spending often increases, not decreases. And that's not a mistake. That is the point. And then we have healthcare inflation. Even if you estimate healthcare correctly today, that number will not stay stagnant. Healthcare costs tend to rise faster than the general inflation rate. Right now, it is about 5.8% a year. So what this means that what feels manageable at age 62 can feel very different at age 80. All right, allow me to try to make this real for you. We have worked with a couple, both CRNAs, late 50s, and they were high earners and great savers, just like you. And when they came to us, they had already built a retirement budget using the traditional method. They came in with a spreadsheet and they had all of the categories listed out. They felt very confident for their retirement. But when we walked through this subtract and replace approach, we found something different. Because after removing the expenses tied to their working years, their actual lifestyle spending was significantly higher than what they had estimated. Again, not because they were careless, but because they were human. So then we added the 4 replacing expenses: healthcare coverage before Medicare, their tax picture in retirement, and a budget for the early years of retirement when most people spend more, not less. Add inflation to that. And the good news, they had enough. But they discovered the real number before retiring, not after. So if you have spent years maxing out your retirement accounts, you have done an incredible job. But it also means a large portion of your wealth most likely is sitting in pre-tax accounts, which means how you withdraw that money matters. When you take Social Security matters. When you convert to Roth matters. Because those decisions don't just affect taxes, they affect your entire retirement cash flow. Again, we're talking $100,000 to a $300,000 difference. That, my friends, is not a rounding error. That is an entire budget category. So here's the shift for you to take away from today. Stop trying to guess what retirement will cost. Start with what you already know, your paycheck. Then subtract with what disappears. That will give you your real lifestyle baseline. So then you can deliberately plan for what replaces it: taxes, healthcare, lifestyle, and inflation. That is how you move from guessing to clarity. If you want to walk through this for your situation, we would be happy to help. We can look at your retirement accounts, your tax exposure, your retirement timeline, and help you see what your real numbers look like before you make the decision to retire. Again, the link to schedule a complimentary discovery meeting is in the show notes. I'm Brett Fellows. Thank you for listening and watching this episode of Money RX for CRNAs and nurse practitioners. Take care of yourself and take care of your money.
This podcast is for informational and entertainment purposes only. It should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, financial, or other professional services.